day trading. Day traders are different from investors in that day traders hold their securities, see, I'm using the word security, for only one day. They close out their positions at the end of every day and then start over again the next day. And this is a firm rule if you want to classify yourself as a day trader. You could be a swing trader, which is a little bit different because that offers you the luxury to keep your positions open, to the next day or the next day or the next day. But if you're going to use a defined term, there's nobody forcing you to do anything. There's nobody breaking your arm, to make you close a trade every day, not keep it open to the next day. But the term day trader is exactly that. This is the strategies you use for day trading and the psychology used for day trading means that every day when you finish trading, everything is closed and you go to sleep at night not having to worry about what happens overnight. And you don't have to worry about what happens tomorrow until you go back to day trade again and whatever day you're available. You don't have to worry about the markets. So by contrast, swing traders hold securities for days and sometimes months, and investors sometimes hold securities for years and years and years. Now, the short-term nature of day trading reduces some risk because there's no chance of something happening overnight to cause big losses. Meanwhile, many investors go to bed thinking their position is in a great shape. Then they woke up to find that the company had announced terrible earnings and that its CEO was indicted for fraud overnight. Now, I'll never forget a story about a swing trader. And this guy was using huge leverage in options. And it was in a medical, I remember seeing he actually opened a GoFundMe page because he lost everything overnight. He had opened up a whole bunch of long positions on a small, tiny little pharmaceutical company. Stocks weren't worth anything. And he opened up tons and tons and tons of them. And he was sure by morning it was going to be up. It had ticked up all day. He kept buying and buying and buying on leverage. And when he went to bed that night, he was so sure he was going to wake up rich that overnight, something, I don't even know. It's like the company closed down overnight. When he woke up in the morning, he had lost his shirt. And seriously, it's a true story. It was in USA Today last year, the year before. It was a horrible story. I just felt like saying the guy was an idiot because he was crying. He lost his shirt. And he had, like I said, he opened a GoFundMe page. But in the meantime, if everything had come out and he had made himself this couple $100,000, he wouldn't be crying, he'd be laughing. So there is both sides to everything. But it's sure nice to be able to go to bed at night not worrying about anything. So, but there's a flip side. The day trader's choice of securities and positions has to work out in a day or it's gone. And see, that's the thing, is it's hard enough to predict the markets. But if you decided you were going to buy some Apple on a day trade and there was no volatility in the markets and the speech you thought that was going to come out or the press release you thought didn't come out till tomorrow, your thing didn't work out. Or for some reason, the tech stocks crashed that day, okay? Having nothing to do with any reason you had picked Apple, but because in your trading method, you can't keep an asset open, you've got a slight problem there. Meanwhile, the swing trader, the investor, has the luxury of time, as it sometimes takes a while for a position to work out the way your research shows it should. In the long run, markets are efficient and prices reflect all information about a security. Unfortunately, it can take a few days for short runs for this efficiency to kick in. So when you take up day trading, the rules that may have helped you pick good stocks or great mutual funds over the years will no longer apply. This is a different game with different rules. Now, the fact is, all of you that are here shouldn't be day traders. You should be what we call swing traders, which gives you the luxury of not having to close out your positions. But again, you're going to employ different types of strategies because day trading is a crazy business. And the fact is, whether you day trade or swing trade, it's the same broker, same account, same everything. Traders work in front of their computers reacting to blips, each of which represents real dollars. They make quick decisions because their ability to make money depends on successful executing. And this is where it becomes different between a day trader and a swing trader, is executing a large number of trades that generate small profits. It is a stressful way to trade because you're not looking to maximize your profit. See, a swing trader buys the euro 113 and wants to see it to go to 114. If it doesn't get there till tomorrow morning, you set your target point, you put your stop loss, your take profit point. Okay. Where a swing trader would be looking for that euro, the day trader is only looking at euro to go from 113 to 113.22. Okay. And between his spread and his loss, he made himself 6 points or 8 points. But he has to do that 10 times a day, 20 times a day. It's because they close out their positions in the stock, the options, the future contract, the CFDs, the Forex, the cryptocurrency at the end of the day. So some of the risks are limited. Each day is a new day, and nothing can happen overnight to disturb the existing profit position. So I'm going to share with you a little presentation that'll explain this a little bit better.
Is the buying and selling of the same security within a single trading day in an attempt to profit from small changes in a security's price. Day trading is most common in stocks and foreign currencies. Day traders base their trades on strategies such as swing trading, arbitrage, candlestick patterns, and trend lines. These strategies are generally constructed on current market conditions and time of day. Day traders also must choose entry and exit points carefully and set physical stop-loss orders or mental stop-loss points to limit their potential downside and preserve enough capital to stay in the game. Day traders attempt to profit from small, short-term price movements, and it's difficult to earn large sums without large amounts of investment capital or the use of leverage. Traders also spend lots of money on commissions, so they must gain enough from their trades to earn a profit after commissions. Day trading is
but those limits on risk can limit profits. After all, a lot can happen in a year, increasing the likelihood that your trade ideas will work out. But in a day, you have to be patient and work fast. Some days, there is nothing good to buy. And this is what you need to look for. You need to be able to start finding assets to buy because you need assets. You can't look at an asset that's trading sideways. Okay? You need an asset because you're making lots of trades for small profits. You need that asset to be moving. And the fact is, do you have the fortitude to face the market every morning? Each trading day is different. Traders won't find 2 days in the market that are exactly alike. Yet enough, though each day isn't exactly like another, there is still patterns that tend to occur over time, hidden within seemingly random daily movements. Now, day trading was originally only available to financial companies because only they had access to exchange and market data. Today, we have ultra-fast trading platforms like LegacyFx, and everybody and anybody can become a day trader. And you used to have to declare that you're being a day trader. Today, you don't have to do that. But the fact is, if you want to trade in options, futures, stocks, you do have to have a larger account because the leverage is smaller. Okay. But if you're trading on a CFD platform or a Forex platform, you don't have to declare anything. You can make as many trades as you want, keep them open as short as you want. Now, there are different styles of day trading suited to different traders' personalities. The styles range from short-term trading, such as scalping, where positions are only held for a few seconds or minutes, to longer-term swing or position trading, where a position may be held throughout the trading day. Now, my friend Ryan just gave a class in Northwestern to a whole bunch of grad students and business students on day trading. And I'm going to share, I recorded his presentation, and I'm going to share it with you because I thought he did a quite good job of explaining it all to you. And then we're going to go back and talk about different trading styles.
Today we are talking about day trading, and this is going to be like a guide to what exactly day trading is, and hopefully by the end of this video you're going to have decided whether or not day trading is for you. Now, I have a camera that's at like 1/4 battery and a lot of information to cover, so I'm going to try to breeze through this without spending so much time rambling on as I'm known for. But anyways, let's get right into it. So what is a day trader? Well, there's generally two different groups when it comes to day trading. You have a pure day trader, and this is someone who buys and sells stocks and ends the trading day in cash with no open positions. So they do not hold any positions overnight. Throughout the trading day, they sell everything they bought that day, and they do not carry anything over off market hours. Then you have a swing trader, which is somebody who holds positions overnight and generally for several days, possibly maybe like 2 to 5 days, maybe one trading week is about how long you see a swing trader hold positions. Most day traders are a combination of these two things. So depending on the stock or the investment, they are going to be holding it for a couple of days, or they're going to trade in and out of that stock within the single trading day. So how do day traders trade? What do they actually do? Well, first of all, they use professional high-frequency trading platforms. They use direct access brokers. They use very high-speed internet connections, so you're not going to see them using like a library internet connection to be day trading. They have very sophisticated setups. They have the best possible internet connection you could have. They also have the best possible trading platforms and the fastest possible trade execution, because you have to realize, as a day trader, even a couple second delay could cost you hundreds or thousands of dollars. So they want to have the fastest possible trading systems available. And they also use a multiple monitor setup, so they have a lot of different charts and things on the screen that they're keeping track of throughout the day. Now, they trade based mostly on technical stock analysis, which is the charts and data. And day traders have little or no concern with company fundamentals. So you're not going to see day traders reading company earnings reports or worried about the fundamental strength of a company. They're caring about the volatility of the actual stock and what the chart is doing and what they feel the stock will do based on chart momentum indicators and other technical indicators. So basically what a day trader does is they're using charts and technical indicators to determine the patterns of the stock, the volumes of the stock, as well as the price movements of the stock. And common technical indicators that day traders use are resistance and support levels, moving average convergence divergence or MACD, simple moving averages or the SMA, volatility, price oscillators, Bollinger Bands, candlestick patterns, and RSI, which is your relative strength index. Now, I'm not saying that you guys shouldn't use these indicators if you're not a day trader, because I am not a day trader. I am more of a long-term trader, but I do use basically technical stock analysis to determine the optimal entry point for a stock. So I think it's very valuable to understand both technical and fundamental stock analysis, so you can kind of use a blended strategy. So it's not a bad idea to study technical stock analysis and technical stock indicators, but I don't think day trading is for the majority of people who are looking to get involved with trading. In fact, I wouldn't recommend it to anybody, and you're going to see why when we talk about the success rate of day traders. So, day traders utilize something called leverage. And what that means is that day traders trade in a margin account to increase leverage on a position. So high trading volumes, because they're trading in and out of stocks mostly on a daily basis, they're racking up a lot in commission costs. And as such, you have to offset that commission cost in order to make a profit on an investment. So most day traders need to borrow money in order to make a profit. So what they do is they trade on margin, which basically means that they're buying an asset where the buyer pays only a percentage of the asset's value and borrows the rest on an interest loan, just like you're getting a loan from the bank. Now, margin trading is an entirely different animal, and it's something I do not do. It's a way to get yourself in a lot of trouble, in my opinion anyway. You're going to talk to some margin traders that say it's the way to go as a beginner. I wouldn't recommend it to a beginner. I will never margin trade myself. If I don't have the money to front for the investment, I'm not going to be investing in that. Anyways, so here is the basic day trading strategy. So most day traders make money on relatively small price movements in liquid stocks. So those are stocks that trade at high volumes with mid to high volatility. So in order for a day trader to make money on a day trade, there has to be some significant or at least noticeable price movement with that stock. So if the stock doesn't change in value much throughout the day, if it's a low volatility stock, you're not going to see many day traders trading that stock. But if there's a mid to high volatility with that stock and it's going up and down quite a bit throughout the day, maybe like a tech stock or a biotech stock, things like that where there's a high amount of volatility, that's where you'll generally see more day traders because you need a price swing in order to make a profit. Basically, higher.
Now, the other thing is you need a great deal of knowledge, experience, and computer savvy to be a day trader, whereas most of us should be swing traders because the swing trader can trade and fix his mistakes. But when you don't have to close your position at the end of the night and you can let it ride, you can, as long as your losses haven't exceeded your stop loss or your risk tolerance, you can let that asset move into your favor and close it at any time you want. Where when you're trying to do high frequent day trading, making lots of small little term trades, you can have 6, 8, 10 trades open. Me, I'm a swing trader, and basically I only open about 4 trades a week. Okay, there's lots of how do I, it's the difference between being a Formula One racer and a guy driving on the highway. You can drive a Corvette or a Porsche, but there's a whole different world when you're putting it on a Formula One track. I mean, I remember, I bought a Corvette 10, 12 years ago, 15 years ago now, and I decided I was going to take it on the track. And I always drive fast, and I could shift gears, I could do everything. I was a good driver. Well, you know what? When I got on the track, it was a whole different world. Now, it was a closed track. There was only 5 other cars. It was a car club. But when they started flying by at 90 miles an hour on my left side and my right side, and you're watching for the flags, you're watching for the curves, you're watching for the bend, it's a whole different world. Whole different world. Something I didn't enjoy. But swing trading is the guy who drives on the highway with the sports car and gets where he's going and enjoys the ride. Now, day traders must have an understanding of market fundamentals if they're going to succeed. Most have many years of experience investing and trading in various markets. They also research constantly using service provided through a full-time online brokerage account and information from publications. And they have scanners and they have all types of things out there and robotics and signals and things popping because they're looking for strictly volatility. They don't even care what asset they're trading. Okay. Now, there's some rules to trading. Always respect the markets and do not trade with market direction, only with market direction. Never overtrade. Do not lose more than 3% of your capital in a single trade. Always put a stop loss. Always watch trends for some time before doing a trade. Don't give ear to rumors and fellow traders. Always do a little homework. Always book profit as well as loss. And majority days of the trading range will range well below, so do not wait for big returns in a single day. The market is always right, and we are wrong. Follow this principle. The market is always right. Now, it takes money to make money. If you want to trade in day trading, that's exactly it. When you're looking to make a couple pips and you're using leverage, you still have to have enough money or capital to make a large enough leverage trade to make any profit because you're looking for such small little profits. And remember, you have profit as well as you have loss. And when you're a swing trader, you can let a good trade run up 40 or 50 points to offset your 5 and 6 point losers. Okay. When you're a day trader, you're looking for such small trades. You have to make 10 of those profitable trades to offset a couple of those losing trades. So while this is risky, it's absolutely necessary. Using a large amount of capital to make many small trades increases potential returns. You need to have a business plan. Day trading is a business. See, most of us don't have the time to trade all day, every day. Okay? And unfortunately, we mix up day trading and swing trading. Swing traders, you can come and trade tomorrow. You can trade Tuesdays and Thursdays from 5 to 7 o'clock. It's a lot more casual. When you saw those old things in the 90s about all these secretaries laying on the beach trading and making millionaires, and these guys sitting in front of their limousine, their Rolls Royces, and they say they're making a fortune day trading. First of all, they weren't day trading; they were swing traders. But this doesn't happen. Okay, day traders are well experienced, true businessmen. Okay, they understand and they stick directly to their trading plans. They have huge amounts of discipline. Whereas us guys who are swing traders have the luxury of being able to use a little bit of discipline. But neither one of us, unless we have a large capital account, are going to put us on the beach with a computer, laying in the sand, making trades, becoming rich. Now, day traders function through electronic communications network. Traders access these networks using a computer and a high-speed connection. Of course, we know that. But the fact is, a day trader needs access to huge amounts of instantaneous data and information. And they also need to find a platform that's going to execute their trades ultra fast. Now, we don't have that problem basically trading CFDs and Forex, because CFDs and Forex are instantly filled because they're a contract between you and your broker. Okay, and remember, you're using a regulated provider, especially if you're using LegacyFx, you're using a regulated provider. But people who attempt to trade without these attributes and resources are likely to fail, and many do. Those who succeed encounter a severe learning curve. Once they gain experience, traders often take up day trading professionally, either as part of a larger institution or a lone rangers. Institutional day traders work shoulder to shoulder with other traders in large computer-laden trading groups. You hear about them all the time. The big whale, the big one, the guy trading $1 billion. Okay, but they're trading for big banks. But either way, it's a full-time occupation. Part-time day trading is possible, but it's difficult. But part-time swing trading is quite possible. Day trading for beginners usually starts with research. They look out for different ways to improve their trading and dedicate a vast amount of time in the search for the Holy Grail. The Holy Grail is what traders call a perfect indicator or a trading system that provides setups with a 100% success rate. And there's no such thing. Even some experienced traders do it from time to time. Unfortunately, perfect systems don't exist, and the only Holy Grail is proper risk management and money management skills. So you need to have a strict trading plan, and a day trader has a very, very, very tight strategy and trading plan. He's only looking for little short trades that fit this particular niche. Okay. And they want to make sure they put stop losses on everything and quick take profits, because they're just looking, they could trade one asset. They could trade a single stock or a single currency or a single Bitcoin 15 times in a day. Okay. I would much rather find an asset and enter the market somewhere around here and let it close and take the profit here, where day traders come in. I'd be so stressed out, I'd be living on Valiums or Xanax or smoking joints all the time, because I couldn't take it. Now, have you ever entered a trade and watched the market make an unexpected turn and then suddenly realize that the trade is no good? Well, you know what? We have this luxury as swing traders. Day traders can't get always stuck because they're looking to make such small profit that they can't. That swing of the market could stop them out if you're using a profit to return ratio, okay? Because it's too small. So you're searching constantly for assets that have the smallest spread, that's your small cost of trading, and have the smallest, you need volatility, but you can't have a swing of the market that pushes your stop loss where you'd be losing money or placing it too close, you get stopped out all the time. So retail traders, especially those who manage their own account rather than somebody else's money, have another rule. The stop losses must comply to. They set a maximum loss per day that they can withstand financially and mentally. If that point is ever reached, they remove themselves from the market for the day altogether with. They know that no good comes from emotional trading. So the bottom line is this: even if you somehow manage to know what the news will be, there is no way to predict how the market is going to react in the first couple of hours to a headline event, to a news event, to economic report, to things like an assassination, things like when Trump's going to come out and say whatever happened with Kim, an election over here, a bombing over there. There's no way to understand how the market's going to react. Just a couple of weeks ago, we had earnings from Walmart. Earnings were not so good. Sales were down. But do you know what? And they were not as good as the markets had expected either. But do you know what happened? Walmart stock rallied. Because what did the investors jump on? Even though sales were off, there was a 42% jump in online sales. Okay. Their growth in online sales was so significant that the traders didn't care about the retail sales falling. They were seeing Walmart taking over a good portion of the market. And so what you would expect Walmart to fall climbed. But by the next day, everybody is sucked in everything, and the markets returned and actually ended up with a loss. So if you were swing trading, you could have survived all that, but not if you were day trading, because you can never know what the knee-jerk reaction is going to be to the market. So also keep in mind that a trader might be able to protect his account with stop orders around the news. If there is no liquidity in the markets, the order won't close. It will continue sleeping until the first available counterparty is willing to trade. So basically, it is only at their price that you will trade. Now, the thing is, the nice thing about most CFDs and Forex is you never have a liquidity problem unless you're trading something very exotic. So most of us here tonight should be swing traders. And if you give LegacyFx a try and go set up a demo account, you'll realize that you should be a swing trader, not a day trader hoping to get rich on the beach. But again, I've given you in your handouts tonight the day trading guide that's going to explain to you every step about being a day trader. I've also given you the momentum day trading strategy, one that you can sink your teeth into. But I've also given you the guide on what is CFD trading and how to understand CFD, and we're talking there about swing trading. And then I've given you the introduction to technical analysis, which will help you come up with strategies to trade in whether you're swing trading or for whether you're day trading. And on that note, I'm going to say goodnight to everybody. Thank you for joining us, and give LegacyFx a try. Whether you want to be a day trader or a swing trader, it's a great place to get started. And take advantage of all of their education. So have a great night. Thank you for supporting investing.com and LegacyFx. Good night now.